by Don Henley, starting now on Amazon Music.
Hey guys, happy Monday. As you guys know, kind of the market's a little dry today. It's not like moving a whole bunch, but I did want to go ahead and send this out real fast because I see this as a safe way to get 50 pips. Odds are we're going to probably be able to get more than 50 pips out of this, but 50 pips easily. So you can expect a pullback. I just kind of want to show you what I'm looking at. So as you guys can see, we're on ChfJpy. Oopsie, that watermark is still not working, so I'm working on that, guys. Sorry about that. But so here's what we're looking at. If we go to our triple arrow system, obviously we have triple arrows. We have a crossover on the ADX. Our currency strength indicators are indicating the Japanese yen is really, really weak, and CHF is really strong. So even if these kind of pop up and down a little, this still looks like a safe trade, and here's why. So again, we've got a crossover here of our MACD. Volume to the upside, and then we're getting ready to cross the zero, at least on the 1 hour we have. So let's assume that it only comes back up to retest structure, or approximately 50% of the move. And you're still looking at approximately 50 pips, depending on the spread and the broker you're using. So if we go over, kind of look at some of the different templates of what we're looking at, we've got an 8 and 18 getting ready to cross over. Everything is kind of lining up. Currency strength indicator, our profit filter, MACD, and I prefer it to break the zero line, but I'm okay with that, seeing how it already has on the 1 hour. Again, our ADX is perfectly right where I want it to be. I mean, so it definitely could pull back, but we're officially making higher highs. We broke a fractal. We have a momentum candle. We've also broken this trend line right here. So we have enough indicators to kind of tell us what's going on. You'll also notice that on the daily chart, we've got a double bottom. So just kind of pointing out all the different things I see. This is the original trend line we have broken. And now we're expecting it to kind of come up anywhere from here before it pulls back around, which would follow suit from where price is currently at to approximately right there for the first pullback at 38 pips or so. We're expecting it to kind of break through, pull back, and then continue up. Because if it continues to retest this entire structure, you're looking at anywhere from about 100 pips. And I'm going to keep going. On the 4 hour chart, we don't have that crossover yet, but if we click down to the 1 hour chart, this is what we're looking at. So we've got that beautiful crossover. We broke the 50, and now we're officially making higher highs. Little arrow, as you guys know, I'm kind of really big on. So this is looking like the perfect thing that I want to trade. As you guys can see, CHF is stronger than JPY. It's going to bounce around a little bit, but that's okay. And wrong template, so that's okay. One more, and I think I already kind of showed you that, but I'll show you just in case I didn't. Again, which was this double bottom on the daily time frame. The double bottom on the daily time frame is enough for me to say, hey, it's a safe way to get those pips that we're looking for. So if this only comes back up and retest structure on the daily chart, I anticipate getting anywhere from about 100 to 120 pips. However, I mean, we're just looking for the safest 50 pips possible. Again, accuracy beats all. When you are trading high risk, we officially now have a green candle for our Heiken Ashi candles, and it is a doji, so it's looking like price is going to turn around. Again, there are no guarantees. This is still trading. Trade accordingly. Do your own analysis, but this is kind of what I am looking at and what I'm expecting it to do moving forward. So if you're looking for somewhere, Let's see. This is just a different setup. I'm working on these YouTube lives because it changes like your entire screen. So bear with me as we perfect the process. Let's click down to the day one, go to the right pair. Here we go. So we also have kind of a head and shoulders pattern. I mean, it doesn't quite qualify because of the way this, right here is this bullish engulfing candle. But what I'm looking at this to do is once this does break this area, there's nothing really to stop it between here and here. So how many pips do you think that we'll end up getting out of this? Anywhere from 200 with a potential stop loss of maybe 80 pips or so. So you're looking at about a 2-to-1, 3-to-1 risk to reward ratio if you're trading this to hold this trade. If you're trading it for the safe 50, make sure that you put your lot size according to whatever your account balance is. Use the lot size that's meant for 50 pips, even if you end up getting 100 out of it. Obviously, once you're in profit, move your stop into profit. And then just let this be one of those few trades this week. At the rate we're going, last week we doubled every trade we took. So potentially you took approximately 8 trades on that spreadsheet rather than 4. And one of the trades, I think we tripled, but it depends on how you held it and how you set your stop loss and take profit. So either way, that's what I'm looking at. I wanted to kind of show you guys what I see. I hope this helps. I hope you have a fantastic Monday. Happy trading, and I'll talk to you soon.